This is our Forex blog for April 6, 2011. And like most days, we really want to buy the strong pairs versus the weak. You can see the dollar extremely weak today. The yen was the weakest pair yesterday, and today it had brief amounts of weakness. At 2 o'clock, it's safe to look for the weakness to continue again here, which didn't, here, which did for 5 more hours. So the euro was one of the strongest pairs. Australian had brief amounts of strength. New Zealand probably the second consistently strongest pair today. So you want to buy the strong euro versus the weak dollar or the weak yen. You can see the euro dollar chart here. 1 to 230 had brief amounts of strength. You might have bought this little pullback right here. You can see it shot up about 30 pips. This is where our new FX Scalper Pro, I'm sorry, let me bring that up here. Right here, from 1 to 2, it had a lot of strength. Using our FX momentum, it would have showed nice little spike here, pullback with very little weakness. Using the new Scalping Pro tool we have in the histogram version, you would have got in, and this was a pretty nice smooth move up. It would have probably stayed green most of the way, and that was about a nice 40 pip move. You have a little pullback here where you might have got in, and anytime you have a double top, you really got to consider that as possibly the high. But when double tops get broken the third time, usually they go to the next level. It's usually safe after a double top to wait for a little bit more of a pullback. You might have got into this trade right here, which is the slightly lower low. Started to go up and failed, and you would have got out with a small loss or break even, and then it pulled back a little bit more and started to go back up. You got in, and it just exploded its way up. I didn't leave this running overnight, so I don't have the FX Scalper Pro on this, but you can see it went right to the Fibonacci profit target that I estimated the night before, and because it's at and slightly above the upper containment band, that's the end of the move. Euro yen also would have been an excellent one to trade today. The yen was not as consistently weak as the dollar. It had brief spurts. You had a little sideways move right here that broke out. You might have got in here at 80, went up to 96, so you certainly wouldn't have lost money on that trade. It went 15 pips your way, but you might not have made more than 5 or 6. This is kind of a perfect example of an Elliott two-way pullback. Strong trend up and went sideways, had a little bit of a pullback. Draw your fib targets on there, and usually somewhere between the first and second fib target is a relatively safe, high probability, high winning percentage place to buy. It's even more of a high odds trade if there's maybe the hourly moving average is right there, or there's a weekly pivot, or a previous day's high happens to be where the fib targets are. In this case, all you had was the fib targets, but it pretty much nailed the first fib target to the pip, and that would have been a decent place somewhere between 4 and 5 to get in the trade. Let's yank over a tick chart just so you can see how using a tick chart can really improve your odds in finding that trade. So here is the fib level. It kind of went down there and stalled. You might have got long right here when it broke out above those few bars high, and you can see it just kind of worked its way up and went sideways. You move your stop underneath the low here, and usually when you're trading with a trend, expecting it to move 2 waves is a decent thing to do. So your profit target, if you don't get stopped out right here, you're in this trade around 30. You've locked in 17 pips, and then when it comes up to the first fib target, you're expecting it to stall, but it doesn't. It shoots past it, and when it hits the second one up here at 79, you're out with a very huge almost 50 pip move. Waiting for an Elliott two-wave pullback. First swing down again was from here. Draw your fibs. Oops, that didn't quite get the high there. Let me redraw that. Okay, so as you can see, it did go slightly beyond the first fib target, but not quite to the second one. You draw your trend lines over these bars high, and again, you're still in at the same place. I actually prefer it to go slightly beyond the first fib target because oftentimes that's not much of a lower price than the previous swing. But again, just as with the euro dollar, look where the price stalled, right at my Fibonacci profit target I predicted the day before. Now, when you're in this trade earlier, you might have decided to get out of your trade up here at the Fibonacci retracement level. It's a pretty high probability place to get out, and as you can see, it had such selling there that it was yesterday's or last night's high, today's high, today's high, today's high, until it broke out. Once it broke out, the next area of possible selling is up here at my fib target and the monthly pivot level, and it's a half number as well. So that was a decent buy again if you would have got out of that one trade, decent, first you get out of that trade and wait for another pullback to buy, or if it goes sideways, anything over 2 hours sideways is a pretty high probability buy. Now the Swiss showed tremendous strength today, but the weekly and monthly trend's down. It's always, you can always trade currencies that have incredible strength, because if a currency's been going down for a few days or a week or a month even, it certainly can have a counter trend day with intense momentum. But keep that in mind when you're trading the Swiss. So we had a strong dollar, weak dollar, strong Swiss. Both of them have trends that are down against most of the other pairs, and so from 3 to 7, it would have been riskier if the dollar was super strong, but was longer term wise, weekly, monthly, but today was weak. At least both of these have a downtrend. Let's bring up the dollar Swiss. You're looking for sells in this, and you can see that last night it had a lot of momentum. You might have waited to buy the pullback here right at the hourly moving average, and guess what? It didn't work. If you were in that trade right here, it did go up a little bit. You might have made a little bit on that trade, but it pretty much flatlined. And this might have been a news event, but when it broke the hourly, anytime a currency is above the hourly for hours and it breaks it, especially after going sideways right there, this is basically one of our rectangle patterns. Just absolutely collapsed. And if it didn't fall that much, maybe somewhere down 20-30 pips underneath the hourly, and if it comes back up and retests it and can't get back above it, that's a very safe, very high probability place to sell. I have an example of that with the pound dollar. It broke the hourly, came back up and touched it, wasn't able to get back above it. Very high probability place to sell. Now, they don't always give you 50-70 pip wins. This one might have given you 15 or 20, came back up again, and you can see the previous day's high right here. When it's above there, it's kind of more likely to go up. When it's underneath there, it's more likely to go down, and you can see it eventually pulled back down here. The counter trend signals that show up on your charts as dots and circles also make excellent places to get out of, both to enter and exit. If you were thinking about selling here anyway and you see a counter trend sell signal, by all means, sell it. But if you're short and you see a buy signal, you might want to get out of your trade. It doesn't mean you can't re-enter 5, 10, 15, 20 minutes, hour later, but these make excellent profit targets. Let's just go through and see what other, especially if you see one of these signals that's in the direction of the trend. If you see a big move down and then it explodes up and you see a counter trend sell signal above the bar's high, it's a pretty high probability trade. Notice also how many times the market hits the upper containment band, and that's the end of the move, and it pulls back. Probably 4 out of 5 days, that's what happens. On one extreme trend day, it can go 20, 30, 50, even 80 pips plus past the bands. But most days they hit this level, and if you're a counter trend trader, it's not a bad place to look for reversals. And you can do that more safely again on the tick chart. And what I mean by safely is, if you're wrong, you lose less pips because you have a tighter stop. Here, came up to that trading zone sell level. There's a weekly pivot level here. It kind of went sideways. You go short. Your stop's just a few measly pips above the high. You're not even risking 10 pips. And you can see it just kind of worked its way down. The FX Scalper Pro, which I didn't leave running overnight on this work machine, probably would have stayed red all the way down until maybe right here. And, you're out with 15 pips on a counter trend trade. There's so many different ways to trade. Trade with the trend, trade against the trend, but just try to avoid choppy sideways action. Now, most of the time my fib targets are going to fib retracement targets are going to be the end of the move, but this one was not at the upper containment band. It went a few pips beyond that. So let's say you wanted to sell here, and it's exploding up, and you can see the bars are dark green, which means it's extremely strong. Again, another perfect way of using the tick charts. If you had gone short right here, for example, it went up to the upper containment band, my fib level, you're short, right? It pulls back only 5 or 6 pips, kind of goes sideways like that. You can see momentum is increasing even as this particular pair pulls back. Other New Zealand pairs are strong. You might want to, at the very minimum, yank your stop down a little bit, or even to break even. So you would have lost 2 or 3 pips, or broke even, or that's it. And it came back up here again. You draw your trend lines underneath the bars low. And I don't usually get out of or get into trades when the trend line gets hit when the market's going sideways. It has to actually go down for me to get in. So if a trend line's broken when the market's just going sideways, that doesn't count as an entry for me. But as soon as it starts to tick down, you're in. 7,900, 7,800 your entry. Your stop might be at 7,810. You're risking 10 pips, and it pulls back, and the market looks like it's about to go red right here, and it's just kind of chopping around here sideways. But you made about 15 pips on that trade. You might have lost 2 or 3 on the first, made 15 on the second, and that's trading. Small losses, big wins.